Hi, let's talk about IRS expense substantiation. You or your client will get a love letter from the IRS telling you that you will be audited. And part of the audit letter, or another letter that will accompany the audit letter, will be the IDR, Information Document Request. The Information Document Request will tell you what items they are requesting from you for the audit to pretty much substantiate expenses taken and so forth. And they will probably, more than likely, will always ask you for the bank statements. That way they can do their BDA, bank deposit analysis, that you hopefully by now you've watched and learned it. And then the expenses that they will ask for, what you need to substantiate. There's one thing that the IRS from time to time will do, and that is called a TCMP, Taxpayer Compliance Measurement Program, where they would actually audit the entire return. But most of the time when they are auditing expenses, they will tell you the classified expenses that they are looking at. So let's go ahead and begin. And here I've given you an example. And what are the expenses for advertising, rent, utilities taken on Schedule C, an item deducted on a Schedule A, such as mortgage interest, especially donations nowadays, employee business expense deductions on Form 2106, and so forth. Pretty much substantiating an expense is all the same. It all follows under the same method. So if you learn how to prepare for it, utilizing what I'm showing you here, then use it for everything else that you will do. Here I give you an example, and the example I'm giving you is about John Doe. Obviously, he operates a pizza store, and his 2008 tax return Schedule C is being audited. And the examiner requested John to substantiate the rent expense deduction of $36,000. So let's go ahead and begin. And please do study the way I did my work paper here and use it for everything when you are substantiating your expenses to the IRS. In the middle of the page, I put down John Doe 2008-1040- Schedule C, so we know what we are looking at. And then underneath it will be rent. That's what we are examining or auditing. On the far right, I put down per return. He had expensed out $36,000. Per audit, $33,000. Adjustment, we have an adjustment here, $3,000. Now, I always conduct my audits using what we call the IFRAC. Issue, fact, rule of law, arguments, and conclusion. If you prepare for an audit via the IFRAC mode, it's very easily then, if you need to appeal your case, everything is ready. The only thing that will be left is just the government's argument. So here, let's begin. Issue. Did taxpayer properly deduct $36,000 of rental expenses for his pizza store as instructed by Revenue Code Section 162? Code Section 162 discusses what is ordinary and necessary business expense deduction. Facts. John owns and operates a pizza store, so we're going to talk about the business here as a sole proprietor, or if it's a corporation, well then it'll be a corporation. He claims his income and expenses on a Schedule C on his 1040 tax return. In 2008, John claimed $36,000 in rental expense deductions. Keep in mind, John is a cash basis taxpayer, not on the accrual basis. Included with this work paper is a copy of the lease, and I'm referencing it. I say reference A101. And what you do with the copy of the lease paper, on the far right bottom corner, write down A101. So that way they know, oh, okay, there's a reference paper behind this one here, on my cover sheet here, my IFRAC here. Then please note that on the bottom of this work paper I included reference number 100. So I'm going to call my work paper here A100. And if you have to present more than one document, please use reference numbers. A101, A102. Let's assume the 102 has other references. You can say A102-A-B-C-D, etc. So canceled checks expense inspected. Here I list all the checks that were paid in the year 2008. They amount to $33,000. Taxpayer has a discrepancy of $3,000. $36,000 claimed on the return. $33,000 is what we were able to substantiate for 2008, leaving a discrepancy of $3,000. Why? Because taxpayer paid his December rent in January of the subsequent year, but deducted this amount in the current period. Well, he's a cash basis taxpayer. His December rent was due in December of 08, but he paid it in January of 09. So therefore, he cannot deduct it in the current period. Then I quote rule of law, IRC section states 162, states that in general there shall be allowed as a deduction all and the ordinary and necessary expenses ... in connection with such service. Argument: taxpayer states that the $3,000 deducted is a mistake and agrees to the adjustment, because, you know, if there is an adjustment, you don't need to argue, oh, come on, give it to me, and so forth. I mean, they're there to do a job, and that's to do an audit. Once in a while, you know, if you are missing a canceled check or a receipt on a small item, fine, who cares? You know, it has no material consequence. But when you prepare for it beforehand, and therefore you know what to expect. You can advise your client, or you yourself, as if you're representing yourself, will have that available as well. So here we have an adjustment of $3,000 will be made to rental expense deduction on Schedule C. This is what we call the IFRAC. Please master it when you substantiate expenses on anything. And when if you don't agree with the examiner, well, then you can appeal your case, and it's ready for you. Thank you for watching.